I think the market somehow learned the lesson, perhaps, given all the volatility in the tariff headlines, that maybe we had some upside. We don't really run for kind of, run with this kind of headline. Is that what's happening?
Yeah, I think so. I mean, I think the market's got quite used to buying the rumour and selling the actual news. The detail's still quite, sparse. And I think until we get the real detail, then, think people can make decisions on it. I mean, the ADR market in the US last night was down to flat. So, it's not going to be a great sentiment boost. But it's very, very good news. I mean, we're going past peak fear in tariffs. If you take China back from the beginning of the year, and we've had reasonably constructive on it, the major issue was the DeepSeek moment. And then we've had the sort of shake hands with the private sector, and that could be the best news longer term because that creates employment and growth. Obviously, then we went through the tariff pain, the market came down. The market is up again since tariffs, like the US. And so there's not, it's all fairly priced in the short term. Mm-hmm. So that's probably why as well.
Okay, so let's talk about the winners so far in Asia. Kospi up at 21% year to date. Hang Seng is right there as well. Let's start with Korea. I mean, you see more drivers going forward. Is it the new president?
I think it's a combination of things. I think one is with the volatility of, in politics last year, the market was left underowned, underperformed, and, we are seeing a bit of catch up. And then we've seen a wider market. We've seen, some of the themes that have been played out, whether it's AI or defense or the nuclear side, that have been then driving specific stories. We've had better news on sort of value up from a company basis. I mean, you can buy banks still incredibly cheaply, with fantastic yields. So, they're quite, they're sort of idiosyncratic trades. And then we've got the new news with the president that he's actually going to spend some more money. He's sort of progressive, I think is the word, but he's also very market friendly. Now, how long that lasts for a while, I don't know. But I do think the market's sort of caught. I mean, we're very bullish. We have been bullish. I mean, we're trying to keep away from US exposure because, that's the real danger if the US does slow down.
So you're talking about companies in South Korea that are exporting to the United States?
Yeah, we're trying, and even, not having too much in the semi area because that's correlated with the SOX. But there are Korean companies that are winning a lot of business outside, and I think the new government, the president, is encouraging that as well. So I think that, going back to 10, 15 years ago, where the Korean engineering companies did a lot of work in the Middle East, across the world, we're beginning to see that order book pick up, and that's very positive. But the market's cheap and it's under-owned, so it still has more to go.
Funny you say SOX, because SOXX, of course.
Yeah.
They had a good run, though. I mean, they're coming back. Are they not coming back? Is this a dead cat bounce? I mean, SK Hynix, for one, I mean, it's up more than 30% so far this year, actually 40% year to date.
I mean, look, can't talk about individual stocks,
Sure.
But obviously there are clear winners out there that are getting reflected, and there has been a bounce back. But probably the next phase is not, the correlation with the US. If people are worried about buying Korea, so you've got some strategies out there that are negative on Korea, it's because of the correlation with the US. So I'm saying, you don't need to have all your, you can have a very diversified portfolio. This is the key point in Korea. You don't need to take the risk that if we're wrong on the US and growth comes down and the US comes down, then the Korean assets get hit. You can have a much more diversified portfolio. Where I think a year or so you couldn't. You weren't seeing the earnings come through.
Okay. So if you're advising against high correlation with the US, then how does Hong Kong or China fit into that narrative?
Well, I think, Hong Kong and China, I mean, Hong Kong, maybe take it separately, has been really driven by, well, one, the IPO market's back. There seems to be, from the mainland, a big push for that. The southbound investors are still buying Hong Kong. It's a cheap market. I think the tail risk and that risk of the tariff news, is obviously much better. And we're seeing HIBOR incredibly low, so there's a lot of liquidity. And so that's been positive. I think across Asia, you've seen a change since April where Asia and the European investors are questioning US exceptionalism. They're not moving all their money out, but they're just saying at the margin, let's look at our own markets. And so I think that's what's been pushing Hong Kong.